Good morning, ladies and gentlemen. Again, we are meeting to continue with our syllabus for municipal audit committees. This is our CPT teaching and facilitation schedule. Just to recap what we've done already. What we've done is to really look at the most important issues so far. So we've looked at chapter 0, where we were introducing the audit committees to the members. We looked quite into detail of issues there. Then after that, which we've successfully completed and posted that information to the platform. All right. So we went to chapter 1 rather, where we dealt with constitutional law orientation. Constitutional law there was very important because it forms basis of what we want to discuss. It really forms the basis of what we needed to do. Because you would remember that all the laws are emanating from the Constitution, and it was imperative for a course of this magnitude to start from there. Really, from the constitutional law, now we are coming to chapter 2, which is about crucial laws. Crucial laws would mean that there is quite a number of laws to deal with in this chapter. Talking about crucial laws, there is an act that has been issued of 2024 that we're going to deal with. That is going to be 2.1.2, just before the Municipal Structures Act. Then we're going to deal with that one. All right. Okay, so let us get into what we're going to do here. All right. So in this section, we're going to look precisely on the 2007 Municipal Fiscal Powers and Functions Act, the MFPF. All right. So in this chapter, we're going to have the main program. The main program is the one that is showing on the screen as we speak. Then we will have the chapter outline, where we're going to go through the act to say how is the act looking like. Then we're going to have a program of action, that is number C, how we have compartmentalized the act. All right. Then we're going to have circular 1. Then the aim of circular 1 there is to provide guidance on the implementation of the Municipal Powers and Functions Act. You will remember that when the act, there is a process of enacting an act up until the president has signed it. The act is promulgated, then acts like these ones are custodized by the National Treasury of South Africa. Then what National Treasury would do immediately when the act has become effective, they will issue what we call a circular. A circular, it's like an explanatory note, which almost explains what must be done to apply or to make that act useful for a particular entity over there. Then we're gonna go straight to the Constitution of South Africa to find out if there are any important items that relate to the chapter at hand that we can find from the Constitution. The aim here is mainly to deal with selected sections of the Constitution and partly selected sections again of section 2 to 9 of the Constitution. So section 2 to 9 of the Constitution becomes an important act there to deal with. All right. So section 2 to 9 1A is the primary focus of this section from the Constitution, which provide for the authorization of taxes, levies, and duties that municipalities may impose. All right. So section 221 is the provision, and section 2291B it states what can the municipalities impose. So what we see from the Constitution is that the Constitution is mentioning three things. It's mentioning taxes, it's mentioning levies, and it's mentioning the duties. We will see when we are going to the Act itself how those things, or how those three items will play out. Then we're just gonna show you guys a simply accounting period for a municipality with the purpose of laying down the preamble to the municipality accounting period to say when does the accounting period start and when do we expect the period and the accounting period for the municipality to end, which is very crucial, important. I've seen and I've had engagement with quite a number of audit committee members, and I was really disturbed when I noticed that these audit committees, these committee members really do not understand how the municipality accounting period works. Then we will go to the Provisional Tax Act. This Provisional Tax Act, a Provincial Tax Act, is mentioned in Circular 1 of the MFPFA. In 2003, the Provincial Tax Regulation Process Act was enacted that sets out the regulation framework for provisional taxes. You will remember that this act is setting out a framework for municipality taxes, and I think this act is mentioned in Circular 1 because they are trying to separate the two, and I think the emphasis there is that this act must not be confused, and for the fact that there is a provincial tax, it means that there must be also a framework for municipality taxes as well. It's a very straightforward situation there. We're not gonna take long from there. The Constitution again is coming. I think the reason why the Constitution is coming again is just to clarify the Provincial Tax Act. Here we have stated that read together with the provincial taxes, the aim here is mainly to introduce the importance of Section 29 of the Constitution, which is about the provincial tax. It's going to be just a few things that we're going to deal with that then we passed. I don't think we have to worry ourselves about provincial taxes, but I think provincial taxes as a sphere of government, because remember, the municipalities are a sphere of government, and on top they are provincial taxes. So they are trying to show us that what is happening at a municipality, it's not new, it's also happening at the provincial level as well. All right, so there is a guidance that we're going to get there of provincial taxes in terms of Section 228 of the Constitution. It's going to be just a very, very brief section to deal with there. Then Circular 2 of the MFPA. The purpose of this circular is to assist municipalities to comply with the requirements of Section 12 of the municipal fiscal powers and functions. And we're going to deal with that. What you will pick up there is that once we get to those circulars, I've already tried to highlight important sections that will be of importance to you, but in doing that, I'm not by any means trying to limit you to the extent in which you want to understand that circular there. All right. Then we've got the annexure, which is the pro forma report to the council. The aim here is to help municipalities to secure council approval for the application of existing taxes to the Minister of Finance to comply with the requirements of Section 12 of the FMPFA. So what we need to clarify at this point is that here we're dealing quite with a very old act, which came around 2007, and when that act came, it was important for that act to come because it needed to conform with other tax reforms of the Republic. All right. So what needed to happen now was that when the act was coming into being, there were already municipalities that were levying tax from residents and commercial businesses. All right. So the tax came with new regulations. So what was important now was that those regulations needed to conform with the national tax reform and to see if the municipality previous taxes would conform with the current MFPFA of 2007. So if the MFPFA is coming in with the municipality already charging taxes to the residents, so the municipality had to apply to National Treasury and for them to get approval to say, before the act came into being, we were already charging taxes, and we are applying for the previous taxes to be approved consistent with the current act. Okay, so that process of a municipality applying to the treasury needed council approval for the application on existing taxes to the Minister of Finance to comply with the requirements of Section 12. Okay, we're going to deal with Section 12 in detail, although we are not going to deal with Section 12 together with other sections. Annexure B, the pro forma report to the council. The aim is to help the municipality to secure council approval that there were no taxes before the enactment of the MFPFA to comply with Section 12 of the Act. Okay, so here we're just giving clarity that we didn't have taxes. In Annexure A, we are making an application that the existing taxes must be approved by National Treasury for the municipality to operate the previous taxes going forward. And then we've got time frames. And now that the act is coming into being, so what type of time frames needed to be followed there? I think the time frames were crucially important just to make sure that everything is coming together. All right. So the aim here is to help us to understand the requirement of Section 12. Hence we're going to deal with time frames separately. So we're not going to deal with Section 12, as I've already mentioned, that we're going to deal with Section 12 differently. We're not going to deal it and combine it with the rest of other things there. So that is quite a very important step, those time frames to the implementation of the MFPFA. Yeah, this one is not correct. Okay. Annexure 1 to the Circular 1 of the MFMA. This circular, Circular 48, it's not one of the circulars listed under the MFPFA. All right. So the Municipal Fiscal and Powers Act includes this circular for a number of reasons, which we will deal with there. I don't want you to be discouraged looking how old the act is, but what is important here is that how the act came into being, what processes were followed, and where your municipality is with regards to this. So the Circular 48 of the MFMA provides updated information to municipalities and municipality entities. So if you are in the municipality entity, you were encouraged here to understand how to prepare the 29 and 2010 budgets and the medium-term revenue and expenditure framework. For this chapter, we will not delve deeper into it because this circular deals with an outdated information, but there is quite, we're going to bring in a section 48, circular 48 again when we are dealing with MFMA. So it's not all lost, but you will see how circular 48 is brought into being here. Then we've got Annexure 1 to Circular 48 of the MFMA. It provides an updated information to the municipality. Annexure 2, Circular 48. This Annexure 2 to the MFMA circular provides updated information to municipalities and municipal entities regarding NESA's ruling on the bulk price of electricity, which didn't really fit into the current act that we are dealing here, the Municipal Fiscal and Powers Act, but because both of these formed part of revenue. So there was some small overlap between these two acts. That is what Schedule 2 was trying to do there. The act itself, we're going to look at the act. We've tried to highlight specific sections, and we're not going to go through the whole act. In the act itself, the aim there is to regulate the exercise of by municipalities and the municipal entities. All right. So when we deal with this, we also need to look at municipality entities as well. The power to impose surcharges. Now, this is coming for the first time. All right. It's coming for the first time. This surcharges, because it's saying surcharges. But if you look here on the Constitution, the Constitution was talking about three things. The Constitution was talking about the authorization of taxes, levies, and duties. Could this mean suggest that one of them is also surcharges? We'll find out when we going through. All right. On fees for service provided under Section 29(1)(a). We've already dealt with Section 29(a) from our previous discussion. Of the Constitution to provide the authorization of taxes. Look, now it's coming to the authorization of taxes. Okay, so what we see here, we see two things. We see the regulation, okay, that is number one, and we see the authorization. All right, so in the regulation, Constitution, this act is talking about one thing, is talking about the power to impose surcharges, but in the authorization, it's talking about three things. It's talking about taxes, levies, and duties. We will see how the act unfolds there. That municipalities may impose under Section 229 of the Constitution and provide for matters connected therewith. That is fine. We'll see how the act is structured, which is important because when you are a member of the audit committee and the directors of the company are giving you information, you must be quite aware, looking on the fact that the majority of the audit committee members are not law orientated. All right, because the majority there, you will find that there are people that are coming from public administration, there are people that are chartered accountants, there are people that are accountants in general, and there are people that are internal auditors. So with this information, we were trying to clarify acts of law is quite important there. Then we're going to delve deeper into the slides. And there, please note that Section 12 is dealt with broadly in other areas like the time frame, okay, like the time frame. So we're not dealing with Section 12 on the slides themselves. All right, broadly in other areas, it has been left out intentionally because we are dealing with it somewhere there. All right. Okay, so we then go to the slides. We are not dealing with Section 12 on the slides. Then we go to the regulations. The regulation that we're going to deal with is about the approval of the municipal taxes. Okay, the way we read the regulation is that these municipalities looked like they applied to the minister to have their taxes upheld and they were approved. Okay, so we're going to see those municipalities and we're going to just go through the regulation and see what the regulation was all about. Then because I do understand that there are municipalities that still apply these ones, and I'll be very happy to understand from your situation to say, do you have a municipality that is applying the Municipal Fiscal Powers and Functions Act on your side, and give us really some nice background on how things are working on your municipality. Pravin Garden, the Minister of Finance, approved of Municipality Taxes Regulations 2012 in terms of Section 5, 6, 10, and 12 of the Municipal Fiscal and Functions Act. Okay, so we'll see this regulation provides for the approval to continue, okay, the imposition of certain municipalities that were imposed before the commencement of the act. So there were municipalities that really made point of these circulars. Remember, we talked about this circular, to say circular number 2, the purpose is to assist municipalities to comply with the requirements of Section 12, the steps And we also have circular number 2 to say the purpose of this circular is to assist municipality to comply with the requirements of section 12. Can you see now here? Then you've got the annexures to help municipality to secure council approval for the existing. Okay, so this regulation is talking about the municipalities that have completed annexure A. All right, the way we see annexure B looks like all the municipalities might have completed annexure B, especially those who don't have the taxes. But the municipalities that had the taxes, even if they completed annexure B, they would still have needed to complete annexure A. Okay, then there are questions. We're not going to go through the questions because questions are subjectives. These questions have been drafted by this team, and of course you might have your own set of questions, but it's important for you to just go through those questions for you to understand what is required from our side there. Then you've got tutorials. The tutorials are happening in the platform, and there is a tutor that is going to be dealing with those tutorials. Then to help us to share different views and experiences on this course, and practical experience as the case may be, and shared by those who might have seen the application of this act. We might find the benefit of answering the covering and other sections aspects that the members might bring. So we understand that even though we did not cover certain aspect in this session, when people are asking questions, we might need to delve deeper into some of the issues that we did not cover here, which is the benefit of the platform. Then we've got video presentation, which helps the audience to go through the course much easy. This video that I'm doing with, because I'm also giving my understanding of the act and set as a point of reference. Then once everything has been done, you've went through your material and you understand all the issues, then you can answer your 10 MCQ questions, which are normally 3.5 hours of CPT, which helps to improve that the candidate has attained the necessary competence with regards to the application of this act, and improves his or her municipal compliance by making a striking impression during the sitting. You should remember to send your CPT certificate to your municipality CAEs. All right, so CAEs also are welcome to be part of this presentation. So after this section, we're gonna go to another act. My team is still evaluating that act, as then it will be included here should it pass their evaluation, or otherwise we'll need to continue with the structure as it is. Very exciting. We're excited as you are about the progress that we're making to uplift our members to be part of the program. The structure of the act. The act itself has got 12 sections that we need to deal with. Section 1, that is the definition. Section 2, the objects of the act. Section 3, the application of the act. And Section 4, that is the authorization of the municipality taxes and application of authorization, that is Section 5. And that is Section 6, regulation regarding imposition and administration of municipality tax. Section 7, collection of municipality taxes. I just want to check something here on the regulation, whether it was approved by the Minister of Finance. The regulation here says, in terms of Section 6, Section 5, Section 6, Section 12. So there are four sections there. All right. So section. Okay, I just forgot the Section 5. We start from Section 5. So Section 5, that's what has been dealt with there by the Minister. Section 5, Section 6, Section 10, and Section 12. Section 10, okay, Section 10 has been omitted here, but we'll look at Section 10 when we are dealing with the act itself. All right, I'm just hopeful that I'm not gonna forget that. Then we get to the program. What we see from the program is that we have already dealt with number one, that is the program, and which is A. We dealt with the chapter outline, which is number B. Now the program, what we need to do, we're gonna go to the circular. We're gonna go through the circular. Then we're gonna go through section 2 to 9 of the Constitution. Then we're gonna show up the municipality accounting period. Then we're gonna look briefly on what is entailed on provincial taxes. Then we're gonna go to section 2 to 8 on the Constitution as well. Then we go to circular 2 of the FMA. Then we go to annexure A of the FPFA. Then we go to annexure B. Then we deal with circular 48, the crucial aspect. Then we deal with the structure of the act. Then we'll deal with annexure B to circular 48 of the FMMA. Then we deal with annexure A to the circular 48. Then we deal with the overview of the act. Then we deal with the slides themselves. All right. Then we deal with the regulation to surcharges. All right, municipality taxes. We're going to clarify that when we have dealt with the act. Then we're going to deal with the questions. The questions are already on the platform. We're not going to look at it for the reasons that I've already mentioned, that you might have your own set of questions, but in your set of questions you might want to add the questions. You might want to look through the questions that we have prepared. In the event you feel like our questions are not enough, are not sufficiently covering the basic components, my suggestion is that could you please add the questions that you think are substantial for all of us to move forward. Then general remarks will also include us looking into the main program as well. So this is the structure that we're going to follow, because the material that is covered here is quite long and extensive and requires some form of energy. So part 1 of 4, so there are 4 parts. So part 1 of 4, we're going to deal with A, B, C, D. We've already dealt with these already. So we're going to go now to D, E, F, G, H, I. Then we call it a day. Then we come with J, K, L, M, N, O, P, Q. Then we call it a day. All right. Let me just cover these ones. We call it a day. Then we go to the act. We call it a day. Then we look on RST. Then we finish the program. Then you are ready then to take through the MCQ and participate on the discussions as well. All right. Okay, let's go to D then. D is circular number 1. Circular number 1 deals with the introduction to the Municipality Fiscal Powers and Functions Act number 12 of 2007. The purpose of this act is to provide for the implementation of the Municipal Fiscal Powers and Functions Act. Remember here, we already mentioned that the act would have been promulgated, and because the Treasury is the custody of this act, then there are only 2 circulars they've issued, Circular 1 and Circular 2, and in those circulars they are trying to make the municipalities and the municipality entities to understand what is it that they are required to do in conforming with the act. So the act is very straightforward, is to promote predictability, certainty, and transparency. And I think at the same time, when we're talking about predictability, is that it drives people to a common purposes, the users to the common purposes, also to ensure that the powers and functions are exercised in the manner that will not materially and unreasonable prejudice national policies. Remember, we have a tax reform in South Africa, and we already have a tax platform where taxes are predominantly dealt with in the national sphere. All right, the fact that we've got provincial taxes, as we're gonna see in section 228 of the Constitution, and the fact that we're having municipality taxes, as we see in section 229 of the Constitution, together they must not compromise what the national legislation is saying there. All right, economic activities across municipality boundaries, or the national mobility of goods and services, and capital or labor, that is pay as you earn. So the aim here is to make sure that there is a clear path that the provincial taxes should follow in charging the residents, and the Municipal, Fiscal and Powers Act must follow a certain path in charging the residents, so that together these taxes don't disturb what is happening at the national level. Here they are mentioning the provincial tax. All right, the Provincial Tax Regulation Process Act was enacted that sets out the regulatory framework for provincial taxes. We've already mentioned that. All right, so hence we said the Municipal, Fiscal and Powers Act sets out a similar framework for the municipal taxes. It looks like in this circular they are using the term municipal taxes and surcharges interchangeable. It looks like it's one thing. All right, so we are happy with that. Okay, so the act covers the regulation of municipality taxes and surcharges. I don't know then why they are separating it here, if here is one thing, or they are saying including surcharges. Okay, so it's not the same thing referred to in section 229 of the Constitution, other than rates on property, because property rates are dealt with in a separate act. So what they are trying to say there is that when you read the MFPFA, you must not confuse it with the act that deals with property rate, that is the Municipality Property Rates Act. You must not confuse the two. All right. So rates on property and surcharges on fees for services rendered by the municipality of the section 229 of the Constitution, as we will see, deals with rates on property and surcharges, and of course what that section does, it stops municipalities to impose income tax, value-added tax, and general tax on sales. I'm really interested to find out what is this general sales tax is, because remember they've already mentioned value-added tax there. In other words, can we have value-added tax and general sales tax at the same time? I don't think so, but I'm really interested to understand that one. All right, so the powers of the municipality to impose rates on property, surcharges on fees for services provided by or behalf of the municipality, or other taxes, levies, duties may be regulated by national legislation, as we have seen the income tax, value-added tax, general sales tax, and the customs duty there. We've already mentioned this, that the aim here is not to confuse the MFPFA with the Municipal Property Rates Act, okay, because rates on property are dealt with separately by the Municipal Property Act. So we already see now that we've got municipal taxes, we've got surcharges, we've got levies, we've got duties, and we've got property rates. So property rates are outside this act, so we've already picked that up. The act does not list or identify specific taxes which municipalities may enact, so municipalities may come up with those taxes themselves. All right, and SALGA, after consultation, may impose any tax, but that tax must not be prohibited by the Constitution. In other words, it must not be income tax, it must not be value-added tax, it must not be general sales tax, and it must not be customs tax, but any other tax they can apply to levy them. The Minister of Finance is also empowered to his accord to authorize a municipality tax. So I think the word authorize here could also mean that he may not authorize as well. The Act provides for the process and procedure necessary for the authorization of taxes at that time. But I think even in future, because the Act is still in existence, so if the municipality today wants to charge taxes, they need to go through this Act, of course, with the amendments that might have happened as well. So great. This clarifies our previous thought that it looks like the Act now, the Act is combining the municipality taxes and surcharges there. What we know is that these taxes are different and they are not the same. Here is the definition of a municipality tax, and here a definition of a municipal surcharge. In a general tax, that is a municipal tax, okay? In a general tax may be defined as government imposed, which is not intended for a specific benefit. There is not necessarily a direct relationship between the benefit provided by the government to the taxpayer and the tax payable. So you can separate the two. Taxes are taken into general revenue and used for a general purposes. So these are not unmarked taxes. The taxpayer receives no specific service in return for his or her payment, but receives a set of general services normally referred to public goods such as municipal roads, street lights, and the like. You will know what the public goods are. Taxes may be contrasted to fees or user charges, while it might be compulsory, are generally requited in the sense that there is a link between the amount paid and the benefit profit. So municipality taxes are not something like that. What is a surcharge? A surcharge, on the other side, is a municipality service in addition to a charge levied by a municipality in addition to a fee or a tariff that is charged, all right, for provision of a municipality service. So we know what a service is, and there's a fee that is charged to it. So you get this service, you pay. It's like you are selling goods and services, all right. A surcharge can therefore be viewed as an indirect tax, as it is a payment in addition to the normal charge. Surcharges generated from the trading activities such as water and electricity redistribution are usually used by municipalities for funding or subsidizing of other essential municipality activities where limited or no charges are levied. So these ones are charged in addition to a charge that already comes in, and that is used for a specific purpose. And unlike municipal taxes, that specific purpose must be specified. A municipal surcharge is defined in the Act as a charge in excess of a base tariff that a municipality may impose on the fees for a municipality service provided by or on behalf of the municipality in terms of Section 2291 of the Constitution. We've already dealt with Section 221A of the Constitution there. A base tariff or a municipality is defined in Section 1 of the Act. We're going to say that when we are dealing with that. Who is affected by the Act? All the municipalities, Category A, Category B, and Category C of the municipalities. If you don't remember the categories, please listen one of maybe our first videos about this one. That is, I think, Chapter 0 and Chapter 1 will deal with that one. I'm not sure in these categories whether they are also including municipality entities, but me and you know now that this Act also applies to municipality entities. All right, the act will have a positive spin-off for the consumer, a proper and transparent process. We have been already told that one of the things the Act wants to do is to promote predictability, certainty, and process. And in transparency. And in that situation, what we also know is that the act must not materially and unreasonably prejudice national economic policies, economic activities across municipality boundaries, or national mobility of goods, services, capital, or labor. So in this spirit, now we are told that there is a guidance that is provided to ensure that there is a proper and transparent process in ensuring that those municipalities who want to introduce these taxes do that without trespassing trespassing their borders. Okay, and that surcharges on municipality services are affordable. All right, so we don't charge consumers exorbitant amounts there. So in introducing these taxes, municipalities would have consulted with other stakeholders such as SALGA, the Fiscal and the Financial and Fiscal Commission, and sectoral departments regulating the municipality services, such as the Department of Minerals and Energy, Water and Forestry, and Environmental Affairs and Tourism. Okay, and of course, hence you will see in Circular 48, it talks about NESA, okay, the National Electricity Regulator of South Africa, will need to review their current regulatory process to exclude the surcharges component, which is currently forms part of the electricity regulating tariff. EI only regulate the base tariff as soon as regulations are issued to prescribed norms and surcharges of the electricity. I think NESA becomes important, especially when you deal with Circular 48 of the MFMA, because I like that circular, even though it's not the first circular that deals with electricity, but because a surcharge is in excess of what the municipality charges. Okay, so the municipalities would be charging electricity tariff to its customers already, and when you put a surcharge on a municipality electricity tariff, which that tariff itself, the base tariff, is regulated by NESA. Then Circular 48 requires that there must be consultation between those two entities when that surcharge is charged on electricity there. Okay, how does it differ from or relate to other government legislation? The Act focuses on municipality surcharges and taxes and does not focus on property rates and user charge tariffs, because property rates are dealt with by the separate act altogether. Okay, the municipality property valuation and rating are dealt with through the Municipality Properties Act, Municipality Property Rates Act, and municipality user charges tariffs are dealt with through the MFMA, that is the what you call the MFMA, and the Municipal Systems Act and the sector legislation. So that one is very, 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 very important, that we need to regulate those ones differently, and we need to understand those three items there. So at the end, you will see that maybe it's now important that we need to have a slide that is gonna show off these things as we're picking them up from this annexure. The Act, however, will impact on budgeting. We know that it will impact on budgeting because of a number of reasons. Remember that we already mentioned that we're gonna have annexures, Annexure A and Annexure B, for the municipalities to apply to National Treasury to continue with their previous taxes. So those previous taxes were in the budget, okay, of those municipalities. So if those municipalities apply, as we will see on the regulations, when we're dealing with the regulations, if those municipalities apply and they get approved, then it means that their budget might not be heavily affected. Perhaps maybe slight changes might be suggested by the minister. But if the municipality had these taxes and applied for them to be approved, but they were disapproved, then there will be an effect on the budget. Remember, if you don't apply to the minister, your taxes must not be applicable, and that will lapse. All right. So of course we agree that will have an impact on budgeting, financial management, and service delivery, as the Act regulates when and how new municipality taxes and such charges may be imposed. So if you are approved, good thing, but are you approved for the right amount or not? Then that is another thing. All right. Then this might not be approved at all. So of course that will have an impact on budget. So at that time, I think it was really important to understand now how the budget increases or how the budget decreases. All right. But for our purposes, even now, the same process will be followed if the municipalities want to apply for municipal taxes or surcharges. All right. So already in the revenue, we understand that there is a line item called municipality surcharges or municipality taxes, in addition to other revenue streams there. Why do we need this act? Municipalities may, in terms of section 229 of the Constitution, impose those acts that we've already provided, and that act in the Constitution tells exactly what must be done. And here it says, if authorized by national legislation only. So national legislation has to be involved, hence the applications are sent to the Minister of Finance. Without this act, municipalities cannot legally impose any new taxes. Well, this must be understood by saying that if you had previous taxes, the fact that there is an act now that is coming in, you cannot continue with your old taxes. You must apply to the minister. Once the minister approves, it becomes a new tax now. All right, because it will be conforming in terms of this legislation, because previously it did not conform with this legislation because this legislation was not there. Section 229(1)(a) of the Constitution empowers municipalities to impose municipality surcharges on fees for service provided by them or on their behalf. All right. I just want to. Okay, it's fine. It's fine. So this is what I want to do. This is what I want to do. The Act gives effect to Section 229 and Section 222. Okay, Section 292. Okay, so in Section in the Constitution, we have two acts. In the Constitution, we've got two acts. We've got Section 229(1)(a) and Section 229(1)(b), and we have Section 2292. All right. So we just have to understand that broadly. Then that is fine. So here we are told that Section 229, subject to these powers to regulation by national legislation and policy. So we will see how Section 229 and Section 229(1)(a) and b and Section 229 differ. So we're told there that although the importance of surcharges as a funding source to assist municipalities to meet their expenditure obligations, there must be a way to make sure that they don't conflict with the national legislation, and also these surcharges must not increase the burden to consumers, because these are the same consumers that need to meet the national legislation there. So municipalities must not impose so much that the residents are unable to meet the national obligations. When did the Act come into effect? The Act was enacted on Friday, 7 September 2007, and published in the Gazette number 3271. Okay, so we're happy with that one. So in what are the immediate implications of for the municipalities regarding the act? They must comply with section 5 and they must comply with section 12, and we need to see how section 75A needs to change for the Municipal Systems Act. Who can apply for the municipality taxes? So number one was all about surcharges. All right, so number one was all about surcharges and the overview of the act, and number two is about surcharges and the municipality tax. Okay, so that number three is about surcharges, municipal taxes, and the overview of the act. Okay, so let's go to it then. So what we learn here is that a municipality, a group who can apply for the municipality tax. In other words, if you have already applied for surcharges, could you also apply for a municipality tax as well? A municipality group of municipalities, SALGA, or the Minister of Finance on his or her own accord may apply for the introduction of new taxes in terms of Section 5. Okay, we're happy with that. All right. It looks like everything else here was based on Section 5 and Section 12. Here we are introduced to Section 12 or Section 5, all right, or for the municipality taxes. So we're going to see what that Section 5 is all about when we're going through the Act and the slides. Okay. When can a new municipality tax be introduced by the municipality? After it has been approved by the minister after introduction. All right. So the minister has to notify the municipality in writing of his approval, okay, or disapproval. So whether the municipality applies and disapproved, or applies and approved, that will be in a form of writing. The municipality, the Minister of Finance will write back to the municipality informing them of their decisions. Okay, the minister has prescribed regulations regarding the imposition and administration of municipality taxes. Okay, the regulation will entirely determine the date from which the municipality tax may be imposed. Very important for the municipalities to follow those guidelines. Which date must coincide with the start of the municipality financial year, so it cannot start on any other date. The collecting agent of such tax, the tax base, as well as any limitation placed on such tax must be talked to in terms of Section 6. All right, can you see that these are real taxes that needs to be dealt with? What is the process to be followed by a municipality or municipalities to introduce a new tax? The application process and procedure are set out in Section 4, 5, 6, and 8. So Section 4 is also affected here as well. So we need to deal with that one, because it's telling us about the application procedure that must be followed there. Okay. All right. Then Section 7 lists the matters that must be addressed in the application when the municipality is applying for the municipality taxes. Okay. What will happen to existing municipality taxes? All existing, now what at that time, or even now when you want to apply, all right, for a new tax. But the assumption here is that the tax that you're applying for might not have existed before the promulgation of this act. So now you will be applying for the new tax altogether. Okay, so you wouldn't have existing taxes for purposes of this part. All existing municipality taxes will be subject to the verification process to determine whether the existing taxes may be continued or not. Okay, then the application is going to do that. Municipalities must no later than the 7th September 2009 apply to the Minister of Finance for the authorization of tax by that municipality prior to the 7th of September 2007. All right. So other than the regional establishment levy or regional services levy imposed under the Regional Services Council Act number 109 of 1985 or the KwaZulu-Natal Joint Services Act, other than those ones. Okay, a tax will lapse on the 6th of September 2009 if the municipality fails to apply for the authorization of taxes. So that is the existing taxes, okay, or 6 months after the Minister of Finance has notified the municipality that an application is not approved. So we just have to look on those conditions on what happened if your application fails over there. Municipal surcharges, number 3. So in number 3, we're dealing with municipality taxes, municipality surcharges, and overview of the Act. Although municipalities can continue to levy current surcharges on municipality services as budgeted for, municipalities will have to reassess current practices and when the regulations are made. So when municipalities have to keep look on the regulations. In the interim, municipalities are however urged that surcharges on fees are affordable to all categories of users of municipality charges. We know that municipalities have got different municipality users. What norms and standards may the minister prescribe? The Minister of Finance may prescribe compulsory norms and standards for imposing municipality charges. All right. So the norms and standards may differ between different kinds of municipalities. We know that there are 3 categories of municipalities, which will also inform the municipality entities. Types of municipality services, level of municipality services, categories of users, debtors and customers, consumption level, geographic levels, and determine these 3 things. All right. So what needs to be determined is the maximum municipal surcharge that may be imposed. Number 2, to determine the basis and the intervals for increasing the surcharges. And number 3, determine matters that must be assessed and considered by municipalities in imposing municipality surcharges on fees. Surcharges look like they are quite tricky because they are in addition to what is already been charged. What are municipalities' obligations in respect of municipality surcharges? Okay, municipalities must comply with norms and standards prescribed by the Minister of Finance when imposing a surcharge on fees for services. Municipalities may annually, as part of its budgeting process, review any municipality surcharges and comply with the requirements of Section 75, capital letter A2, Section 75, capital letter A3, Section 75, capital letter A4 of the Municipality Systems Act relating to the manner in which fees, charges, or tariffs are levied and how a resolution in that respect must be known. That is pretty straightforward, but there is enough guidance there in terms of what must be done. All right. Thank you so much, ladies and gentlemen. We now have dealt with number D, that is secular D. Now we are looking into the Constitution, and we are looking precisely on section 229 of the Constitution. There are only 2 sections that we are looking at in the Constitution. We are looking not on everything. We are looking on section 221 because that's what we have mentioned here, that in the Constitution we need to look on section 221A first. Okay, section 221A says, subject to subsection 234, a municipality may impose rates on property, which we have agreed that those rates are dealt with by the separate act, not by the Municipal Fiscal and Powers Act, and surcharges on fees provided by or on behalf of the municipality. That's number 1. Number B is talking about, if authorized by the national legislation, other taxes, levies, duties appropriate to local government or to the category of the local government into which the municipality falls, but no municipality may impose income tax, value-added tax. So these are prescribing sections section number 1 and number 2. All right. So if we go to number 2, the power of municipality to impose rates on property, surcharges on fees for service provided by the municipality or in its behalf other than the taxes or levies may not be exercised in a way that is unreasonable. Or this section 222 justifies what was said here. Okay, justify what circular 1. So circular 1 also puts emphasis. Circular 1 also put emphasis to the Constitution. All right, this part is section 2292 of the Constitution there. So we can see that how this Constitution relates to the MFP Act in terms of that. All right, and we can because of the work that has been done, we can relate to these two sections. I mean, the Constitution and this circular number 1, the introduction to the Municipality Fiscal Powers and Powers Act there. So we're happy with what the Constitution is saying. We already dealt with those. We already dealt it when we were dealing with our main program. We already dealt with it when we were dealing with this program, and we already dealt with it when we were dealing with circular number 1. Now we find it stated the same way in a more emphatic order in the Constitution itself. Now we're going to F. F is all about the municipality financial here. So we know that all entities or businesses or trade persons have got a 12-year financial year end. So with the municipality, we know that a municipality also is an entity or is a business. So it has got 12 months, okay, starting from June, July, August, September, October, November, December, January, February, March, April, May, June. June to July, yes. So a municipality that starts with 1st of June, the accounting period ends on the 31st of July. Okay, yeah. I almost missed it. I thought I had 13 months in my accounting period. So simply put, 1st June to 31st July. That is the accounting period. So we're introducing this accounting period here, okay, so that you follow some of the things that we're gonna start dealing with, because now we have already started entering into municipality because we've introduced the first act to the municipality. So it is crucial that we understand the accounting period that governs that municipality, because now going forward as we go to other acts, we will be inserting some meat to this financial accounting period. Now we go to G. G are the provincial taxes. Remember, we are not dealing with provincial taxes, all right? We are only understanding provincial taxes to the extent that they were mentioned in circular 1, okay? Because remember, section 1, circular 1 mentions provincial taxes here, all right? And that is the reason why we are going there to look at it. Otherwise, we are not focusing on provincial taxes. We are focusing on provincial taxes to the extent that they are mentioned in circular 1 of the Municipal Powers Act. To regulate an intergovernmental process that must be followed by provinces in the exercise of their powers in terms of section 228 of the Constitution to impose tax, levies and duties and flat rate surcharges on the tax basis of any tax, levy or duty imposed by national legislation to provide for matters connected with. So it looks like the terrain or the scope of work or the scope of amount that must be covered by the act by the Act. And sorry about that. So there is a same scope between what Section 229 and Section 228 are covering. I have just highlighted this one that says the financial year of a provincial department starts from 1 April and ends on the 31st of March, all right, because it's different to that one of a municipality that starts on the 1st of June, all right. So that is very, very important. Okay, general principles, it's not a lot. It says a province may not exercise its power in terms of Section 228 of the Constitution to impose provisional tax in a way that materially and unreasonable prejudices. So this part of this act, we can also find it in Section 222. In the Constitution, Section 228 of the Constitution. Then everything else is the same there. All right. The collection of provincial taxes. The South African Revenue Service is the collecting agent for the provincial taxes. Okay, but look here. Here we were not told who is gonna collect the municipality taxes, but what was required was that these must be made known. All right. For instance, here, when can the new municipality tax be introduced by the municipality? I want us to focus on bullet number 2. Prescribe the regulations regarding the imposition and administration of municipality taxes or tax. The regulation will inter alia determine the date from which the municipality tax may be imposed. The collecting agent, they don't state who the collecting agent is, as they do state here that the South African Revenue Service is the collecting agent for provincial taxes. Despite Section 1, subsection 1, a province may not impose a provincial tax unless it has concluded an agreement with the South African Revenue Service or any other designated person to collect a provincial tax. So that is also another limitation there. All right. Introduction of a provincial bill. A mandatory bill for the imposition of a provincial tax must be introduced in the provincial legislature only at the date when the relevant province's annual budget is introduced in that provincial legislature. We did not talk about a mandatory bill for municipality taxes. So you can see that the weight that is given to the provincial taxes is completely different to the weight that is given to the municipal taxes. Despite Section 3.1, if a province intends to impose a provincial tax that is already regulated in terms of the Act of Parliament, maybe the Income Tax or the Customs Act or Value Added Tax or the General Sales Tax in terms of Section 3.6b, the MEC for the finance in that province must, when introducing a bill in respect of such tax for the first time, submit only the provincial legislature the particulars contemplated in Section 3.1 and nothing else. The particulars to be submitted to the provincial legislature in terms of the subsection 2 above must only contain the information contemplated in Section 3.2a, 2d3, 4, 5, 2e1, 2, 3, 4. So there is a guidance that must be done at a provincial level, which is completely different from what municipalities have to do there. So that marks an important difference between these two, and it helps us to understand how these two taxes differ, how these two taxes come into being, and what is the process of the minister approving the taxes. And of importance, you would have noticed here in the provincial taxes that they are talking about the MEC, and there was no MEC when we talk about the municipal taxes or surcharges there. Okay. Now we deal with the circular number 2 to the PFMA. This circular, it's now H is an annexure, pro forma report to the council to secure approval for the application on existing taxes to the Minister of Finance to comply with the requirement of Section 12. That is the reason why we did not go through Section 12, all right, because we knew that throughout the process there will be a way of dealing with Section 12, all right. For instance, this annexure now, as you would have seen in our program, annexure A, all right. This is the annexure that is simple accounting period circular 2. Yeah, we're dealing with this annexure now. Okay, so Section 12 of the MFPFA requires municipality to apply. Okay, you apply whether you didn't have a tax or you had no existing tax. Okay, to apply to the Minister of Finance for any tax other than property rates. The emphasis on property rates is given there because property rates have got a separate act that deals with them. Such an application must be done 2 years on the enactment prior to the September 2009, all right, or by the 6th of September 2009. So you are having 2 years to make that application. In that 2 years, there's nothing that says from 2007 you may not be, in other words, you cannot make your application after 2007. Should a municipality have any tax, right, and no application is made by a municipality to the Minister of Finance to continue imposing taxes that existed prior to the Act, such municipality tax will automatically lapse on the 7th September 2009. So even though the Act comes into being in 2007, it gives us a chance of 2 years to continue levying our taxes, but it cannot be levied after the 6th of September. Okay, should the Minister of Finance not approve the continuation of municipality tax, such tax will lapse 6 months later after the municipality's notification. All right, 6 months later after 2009. As not all taxes are necessarily defined as tax in the financial statement records of the municipality, the National Treasury has developed a pro forma application to assist municipalities in identifying such taxes. Okay, through this process, the municipalities can either identify that it had taxes in place other than property rates and surcharges on user tariffs and charges, or it can identify that it has no taxes in place other than those already legislated or regulated by government. It is compulsory for municipalities to make an application when there are any regulated legislations there. All right. In completing the pro forma application designed by National Treasury, the municipality has defined the following taxes that existed prior to the Act. My screen is moving, I don't know, and it's making it so difficult for me to properly read the information. Okay, let me do this and see if it won't be stable. Okay, yeah, it should be fine now. Now remember, although we have not looked at the structure of the council properly, but we have dealt with the preamble to the council. So what we know is that the municipality administration is held by the municipality manager. Then the municipality manager reports to the council. The council, as we have seen when we're dealing with the constitution, is that it is a group of people. There is no juristic person there. It's only a group of natural persons. So that is the highest decision body of the municipality, the accounting authority. All right. So the municipality manager becomes the accounting officer of the municipality. Then the council becomes the accounting authority of the municipality. So the council takes a final decision on the direction in which the municipality must take. So we're told that the council hereby approves that the contemplated application is signed off by the municipality manager and the chief financial officer. So the application for imposing taxes on the application of the MFPFA must be completed by the municipal manager and the chief financial officer. Serves as the formal application to be submitted to the Minister of Finance for consideration. That is the completion part. It's not the authorization part, it's the completion part. The Council further resolves, therefore, authorizes that the taxes that are listed above were here. The taxes that are listed above, okay, are the only taxes of the municipalities that the municipality levied prior to the enactment of the MFPFA. All right. So this application is doing that. Okay. So that now brings us to the end of our session. That is GH. I don't know where is. Oh, okay, here. E and H are here. Then we do F, G. All right. H we've already done. Then we do I. Okay. I suppose this is I. I just want to check what is my I is. GH, yeah, secular 2, but where is secular 1? Oh, here is secular 1. We've already dealt with it. I is secular 2. This one is an annexure A. I just want to check something here before. Okay, just want to check something here. Secular 2. Okay, secular 2, why secular 2 is here. I think the secular should be here. Okay, yeah, this secular should be here. Okay, no. Secular I just want to open secular I. Yeah, yes, secular 2, but I think the problem here is with the numbering. So we've dealt with secular 1, which was the introduction of the MFPFA. This secular, yeah, that is this secular. We have dealt with this secular, which was the introduction of the FPFA. Now we are coming to this secular. We're coming to this secular, which is the verification of municipality taxes that existed prior to the introduction of the Municipal Fiscal Powers and Functions Act, the MFPFA. All right. So now we're gonna deal with this one. Then we're gonna finish part one of the presentation. Then we'll go to part 2 of the presentation. Just want to clarify here: A, B, C, D, E, F, G, H, I. So this is the last one in this I is the last one in this presentation here. Okay, here is I. I is secular number 2. of the MFPFA, that is the verification of municipality taxes that existed prior to the introduction of Municipal Fiscal Powers and Functions Act. Okay, the purpose here is twofold. One, for the pro forma application of the existing municipality taxes. Okay, so we're gonna deal with that pro forma application, and two, what needs to be submitted to the National Treasury. This is already dealt with in detail in circular here in Annexure A. Annexure A deals with this quite in detail for the first circular A. All right, so let us find out now what they are saying we must do, because we already know that there must be two circulars, that there must be two annexures that are sent to the National Treasury. One, you need to say that you do have taxes and you're gonna abolish them, or two, you have taxes and you want to continue with them. What is necessary to verify municipal taxes that existed prior to the Act? Significant reforms have been made to the South African tax system, as we already said prior on, with the aim to simplify the tax system, broadening the tax base, and to reduce tax rates to ensure a stable, neutral, efficient, and equitable tax regime. That is what is happening at the national level. Okay. It is important that the local government fiscal system, including municipality taxes, fit within the overall tax policy framework of government and should not undermine national goals of microeconomic stability and redistribution. The Constitution is very clear to that one. To comply with the basic tenets of goods and sustainable tax instrument, we are happy with that one. So that is the purpose of introducing this act, is to make sure that it explains the national legislation further correctly. What we need to do now, I see what is disturbing me. This one is E and H, so we should have looked at section 228 after we have dealt with provincial taxes. Okay, let me quickly finish this one, then I'm gonna go to the provincial taxes. What are the legislative requirements with regards to the verification of municipal taxes that existed prior to the Act? We have already told with section 12 of the MFPFA, which deals with transitional requirements. So we are not gonna go to the Act now. So it's the best thing that we look on these issues here. So a municipality must, within 2 years after 2007, okay, of the date on which this Act commences, apply to the Minister of Finance in accordance with this Act for the authorization of a tax, other than the regional establishment levy or regional services levy imposed under the Regional Services Council Act 1985 of the KwaZulu-Natal, or the KwaZulu-Natal Joint Services Act 1990, imposed by the municipality prior to the commencement of this Act. Those ones are excluded. A tax referred to in subsection 1 lapses 2 years after the date on which the Act commences if a municipality fails to apply for the authorization in accordance with subsection 1, or 6 months after the Minister of Finance has notified the municipality that an existing application contemplated in subsection 1 is not approved. So those are the disqualifying instances, and we've already dealt with those disqualifying instances. A municipality, where advised that they must, by no later than the 7th of September 2009, apply to the Minister of Finance for consideration of a tax by that municipality prior to the 7th of September, other than the ones that we have mentioned above, including the municipality property rates, are regulated in terms of that and property rates that are regulated in terms of that sections that we've always been mentioning. Should no application be made by a municipality to the Minister of Finance to continue all municipal taxes that existed prior to the Act, such as that which automatically lapses on the 7th of September 2009, or should the Minister of Finance not approve the continuation of those taxes, such tax will lapse within 6 months. I think here the emphasis is the same, that what will happen if you don't apply. Why is it important for municipalities to complete the pro forma application on the municipality taxes that existed before that? All right. So there is no current comprehensive list of municipality taxes. We already know that. All right. What National Treasury does intends to assist municipalities to provide the necessary information to the National Treasury so that all municipal taxes that existed prior to the Act can be subjected to the verification process prescribed in terms of the Act. All right. So that is the purpose for completing the application form. All right. If a tax is identified through the verification process, the tax can be approved for that municipality or a group of municipalities, a category or categories of municipalities, and or all municipalities. Okay, that is the reason. What will happen if the municipality tax that existed prior to the Act is disallowed? That is the budgetary effect now. Sorry. All existing municipal taxes will be subjected to the verification process to determine whether they fit with the overall tax policy framework or the government and comply with the basic tenets of a good and sustainable municipal tax. We've heard this before. Should an existing tax be disallowed because it does not comply with or both criteria, it will mean that a municipality may not levy such tax in 6 months after the notification has been received, that this tax will be disallowed in future. So those are the implications there. If a municipality continues to levy a disallowed tax, it will be in contravention of this Act and could only be required to pay back any payments received by it from a taxpayer which were levied by the municipality. So you are just creating a problem for yourself if you continue charging these taxes. Who should complete the pro forma application? All municipalities should complete the pro forma application whether they had taxes prior to the Act or not. The municipality should report on taxes and revenue sources that are levied by the municipality as well as municipality entities. Okay, so this also applies to municipality entities as well. Who should approve the application that will be submitted to the Minister of Finance? We've already talked about this. The application must be signed off by the municipality manager and the CFO and be sent to the municipality council for adoption, and there's going to be a resolution there. A pro forma report on issues that the council must adopt and agree upon is attached in order for the council to support that completed pro forma application. Serves as a formal application with respect to section 12 of the Act. So that's what must happen before the application must go to the council, to the minister. Please note that the application for the municipal taxes, other than the property rates and surcharges included in user charges that existed prior to the Act, that are not signed by the CFO and the municipality manager or submitted to the council for the adoption in a council resolution, will not comply with section 12 of the Act, because section 12 of the Act says the CFO and the municipality manager must sign off, then the council must approve. In cases where such applications are received, they will be deemed as non-submission because they do not comply with the process. Okay, so everything else on that I'm skipping, it's not important for our purposes and we know it. What should the municipality report? And section 12 of the Act provides for the verification of all municipality taxes. However, not all municipality taxes are recorded as taxes on the financial statement of the municipality. Hence, this verification is important. The structure of the application: the pro forma application requests information on what revenue the municipality wants to charge, what is the rate in which they are charging it, what are the reasons for receiving the revenue, why, the charge liability, who is paying these, and who is collecting these revenues on behalf of the municipality, and what is the frequency of charging these revenues. The time frames, we are not going to deal with time frames here because we are dealing with time frames elsewhere. All right. So we're going to deal with, when we come back, with Annexure A, the pro forma report. So, ladies and gentlemen, thank you so much. That's where we would want to. Okay, perhaps let me mention that the time frames for Section 12, we're not going to deal with them here because there is a chapter that deals with time frames, and dealing with them here won't make any justice. So, ladies and gentlemen, I would love to leave this annexure here and this circular here. So what I want to do now, I want to go to the Constitution and deal with section 229 because it's E and H here. Okay, here is the Constitution. Section 228 of the Constitution is dealing with provincial taxes, and it's almost structured the same way as it is structured on the Act. Remember, we've already dealt with the Act already, provincial taxes, section 2281. Okay, we've already dealt with section 221 in the Act, and we've already dealt with section 228 of the Act. They are almost the same as what we have seen here in terms of section 229, the municipal fiscal powers and functions. I think really it is important that these two acts are read differently, although they want, in the Constitution, they want to achieve one and the same thing. Ladies and gentlemen, thank you so much. I'm happy that we have finished up to number I. So when we come back, we're going to start with JKLMNOP. In that regard, I think I would want also to switch off my device just to reboot because it's shaking and now it's making my reading not properly. All right, so because then I will need to read item, whether I'm making mistakes in my reading because a sentence is appearing is shaking, so I end up reading another sentence instead of another one, and that is taking me some time. Okay, thank you so much, ladies and gentlemen. Have a nice day.